Hi, Saen Higgins here. In today's video, we're going to talk about what is a tax lien certificate sale. Okay, in this video, what we're going to do is we're going to specifically talk about what is a tax lien certificate sale. And you know, my frustration, okay, I've been doing this 30 years. Literally, there is nobody on planet Earth that has taught more people worldwide how to invest in tax lien certificates than myself. And literally during the pandemic, I stopped doing a lot of the teaching, and then I saw some of the stuff out there. I'm like, that's not how it works. And so I really felt compelled to come back here and teach people what it's all about. So let's talk about a tax lien certificate sale and what's it all about. Okay, this is the beautiful part. Let's just start at the what is a tax lien certificate sale? These have been around longer than we've been a country. So the reality is, this isn't some get rich quick, put a vending machine, walk across hot coals, or get really motivated. God bless Grant Cardone and all the Lear jets and all that good stuff. This is for real people who want to make real money and provide for their family, okay? You don't need to be a brainiac, Elon Musk, to make this happen. So specifically, let's go back, way back. Okay, when we founded this country, most of the people came from England, and so we took a lot of their laws. We're based on English law, period. In some court cases, they'll go all the way even back to English law on this. So what happened was this, okay, when the United States was founded, even as a colony, they're like, yeah, we need to get a school, we need these bridges over here, we need a constable, we need all these things. Okay, it wasn't like, how are we gonna pay this? We're gonna have property taxes, because that's exactly what England did. Here's where the difference started to deviate, and it's a little tiny difference like this became a chasm later on. In the United States, the property taxes are hooked to the property, not the owner. That's a big difference. See, in England, if you owned a piece of property, you never sold it. I mean, selling real estate in Europe is a relatively new thing, and we're talking the last 50 to 60 years. Okay, before that, literally, if your family had the opportunity to own the property you're in, no more landlord over the top of you. Think about how that term came into fruition. Okay, they bought it, and you gave it to your kids. You didn't sell it, so the taxes were really associated with the owner of the property. Well, that didn't work in the United States, because what would happen is a pilgrim or Irish, come over here, whatever the deal is, and they're like, like my relatives came over to the East Coast, Irish during the famine and what have you, as immigrants. It sucked, so they left. So if you have a property there, you're not paying property taxes. Not that my relatives didn't pay their property tax. I didn't want to go there, but sorry, grandpa, great grandpa. But anyways, if he said, I'm out of here, I'm gone, now he's gone, they don't know where the heck he is. He could be in Missouri, he could be in the Oklahoma, land grab, whatever the case is, and the county's going, well, okay, what are we gonna do with this property? So the taxes stayed with the property. So then the county, think about this, the county is the ultimate a title, they own the property, so to speak. That property cannot clear anything unless the county says so. So the county goes, well, okay, we're the ones that clear title on this, but they owe us taxes. This property owes us taxes. So a tax lien certificate is kind of like a phantom lien. You don't see it until you don't pay it. And when it doesn't pay it, it pops up. So anybody can buy this property, but the county says, look, if you want this property, in order to get clear title, you're gonna have to pay us, okay? Hopefully that's starting to make a little more sense, because you're going, oh, okay, I get it. So they don't care if there's an IRS lien, a bank lien, or whatever the case is. The county says if somebody doesn't pay these property taxes within the prescribed amount of time, and we'll get to that in a minute, then the county has the right to go after our money. Because we're the county, we've always had a lien on that property, so we're a superior position once they hit certain KPIs, benchmarks, so to speak. So after 3 years, 4 years, or whatever that case might be in that particular county, we have the right to go, hey, everybody that has a financial interest in this property, we're now number one, because we're the county, and we want our money. You either pay our taxes plus the interest rate to secure your position, or we will take this property back, eliminate every liens and encumbrance on that, and sell that to the public. So that's how that works, and that's what this tax lien certificate sales are all about. And here's the one thing that okay, look, I've been doing this too long, so maybe it's just obvious for me. But a lot of people go, wait a second, you can eliminate the bank? Oh my God, what are the banks gonna do? The banks aren't like, oh my gosh, they forgot to pay. They know this. Look at your mortgage. It says there in one of the 25,000 pages you've got to sign, if you fail to pay your property taxes and you jeopardize the bank's position, okay, and it goes to a tax lien sale, the bank can pay your taxes off and immediately call your loan due at that moment. So they're not really freaked out about these things. They really don't care. Some of you are saying, yeah, but Sean, everybody pays their taxes through their mortgage. Contraire. That's, I think, French. I don't know what it is. Anyways, that's not true. And here's another thing, and I don't know what that exact stats are. So those of you that love to get stats, go out there and find out how many properties are owned free and clear. Last time I checked, it was over 40%. Okay, plus a lot of people, myself included, do not pay my property taxes through my mortgage. I pay it directly to the county because the mortgage companies collect all your property taxes throughout the year. They're making 4 and 5% on it, and then they pay it off at the end of the year. Why are we giving it to them? Okay, they already get a fractional banking. That's how they do that. Anyways, another video. So that's what this is all about. The county has ultimate control over title on a property. And some of you are going, oh yeah, it makes sense. Oh, but what about the big IRS? Doesn't matter. The IRS has only been around since, what, 1913? So it's not like it's an old entity. But even that, if the federal government puts a lien on it, the county doesn't care. I don't care who you are. We control the title on this. Okay, now, this is really important to understand. Okay, a tax lien certificate sale, okay, that's what we're talking about here today, is the advent of they have not paid their property taxes for 1 year. Okay, so all tax lien certificate sales based in the United States, and about 27 states do this. Okay, the rest of them do a deed, we'll get to that in a second. Say, once a property owner's been delinquent for 1 year, we have the legal right to bring those taxes up for sale. Now, that doesn't mean you buy the taxes, you get the property. What they're gonna do is they're gonna offer a redemption period, okay, or grace period, if you will. So typically, I get this up here because it's 3 years, 2 years, or what have you. What the county says is, look, we need our property taxes right now. In the interim, okay, if they don't pay those property taxes off, plus the interest rate to us, which we pass on to the investor, within 2 to 3 years, that person can foreclose on the property. Now, let me kind of recap, because this is really important for you to understand. Okay, every property has to be delinquent at least 1 year before the county is allowed to sell it. Okay, but you cannot take somebody's property that has been delinquent less than 4 years. So in other words, that's where the 3 years comes in. Delinquent 1, sold, 3-year redemption period, 4 years total. Okay, so I want to kind of get away from this whole you're taking somebody's property. They have had 4 years, multiple notifications, all sorts of things. And the theory behind the 4 years is everybody has financial woes. Most people have cycles. So there's a divorce, or there's an illness, or there's a whatever the case might be. Yeah, I get it, but usually they're coming back out. Now remember, this is not a full-blown mortgage either. This is just a few years of back taxes. Okay, so again, if I have a property that's $250,000 and I owe $5,000, $6,000, $7,000, $8,000 in back taxes, I can probably go over there, sign my name, get some money to make it out. Okay, so the likelihood of you getting a property where nobody redeems within that 3 years or 2 years are slim and none. So you get yourself 16, 18, 36% on top of that. Now, in future videos, I'm gonna show you how to get the property every single time, but I made you a promise, and here it is. I told you, if you stayed to the end, I got a little gift for you, and this is what it is. I got a brand new course on this, yes, and it's a gift to you. It's free. Free. That means nothing, nada, anything. Okay, I think. So click the link down below. That's Higgins, Higgins, method.com. Go to that link in there, and my gift to you is a complete video on how to do this. God bless, good luck, and we'll see you on the other side.